Indeed, intraday traders. That is a lot of intraday volatility. Markets are definitely shaky here. What's going on, everyone? This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. Today, we're going to be talking about two main things. Number one, we're going to be taking a hard look at the developing conversation we're having about Bitcoin's future trajectory, its future CAGR, its compounded annual growth rate. We're also going to be looking at tomorrow's main event, Jay Powell taking the stage over in Jackson Hole, Wyoming. If you've ever been, it's an absolutely gorgeous, gorgeous, gorgeous place. And the macro continues here to let's say evolve in real time. Always be prepared. The macro can change rapidly. In order for us to get into what I consider the main theme of today's session, and that is Bitcoin. And it's like each day little more and more nuggets are uncovered, and that continues to be the case. I can't wait to get into this one. If you enjoyed that session that we had on Monday, you're really going to like today's as this conversation continues to evolve. Before we do that, I want to just take a look at what's going on right now in the markets. And we saw that two things. We saw unemployment claims coming in higher than expected. We continue to see that slow motion deterioration of the job market. And at the same time, we're seeing manufacturing and services PMI coming in greater than expansion and showing that the economy is actually accelerating over here. So the dynamic that we currently look at, I hope I could bring it up over here really quick. The dynamics that we currently continue to look at over here, and one of them you could see that the PMIs, the ISM, and mixed recovering. Now that's beginning to turn greenish here, and they continue to improve and look good. That's a healthy sign. Now, the other sign that's obviously at play here is, well, what's going on with the job market? And we continue to see just that slow motion is a good way to put it, right? Deterioration, and it's definitely a trend, and it's a trend in place. Would something like Fed lowering rates spurring even further growth? It's going to spur inflation. Don't forget about that. There's no question if they're able to engineer an acceleration of growth that we're going to then, and that's not going to be a rapid event. That's not a quick devaluation, a debasement that's going to cause all of a sudden this like wave of inflation that we saw recently after the lockdowns. But it is going to cause higher inflation. That will be something to contend with going forward. That's likely when we run into more of a stagflation problem. You will be seeing going out, assuming that over the next year, 2, 3, they're able to engineer some growth. Fast forward, then we're going to run into, I think, some stagflation. Boom, 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 boom. You're gonna love today's session, and then be able to come in and help for sure further. Um, let's take a look at what the situation is for tomorrow with Jay Powell. The topic of the symposium is the labor markets in transition, demographics, productivity, and macroeconomic policy. So let's focus in on the labor markets in transition. What does that mean? And likely, like we've seen over the past 4 years, a significant rise in immigration, in illegal immigration. And of course, we saw that because of that, the job market, like low cost of labor, no doubt. And now that's in transition. There are like almost zero people crossing the border illegally right now. Some people are actually being deported, and we're seeing a transition take place. That's clear. That's present. Demographics, I'm not sure what they're going to hit on. Productivity, that's rising, and we all believe that the advancement of AI and those tools are going to increase productivity. So before those tools are even really let's say like active, like we are seeing productivity increase already. Those tools are going to continue to increase. There's a tension there. And like forget about fast forward 5 years from now when expectations are that like you'll know someone with a humanoid in their house, and whatever that means at that particular time. And it's not just the humanoid robot itself. Don't forget it's the brain of the humanoid, that AI technology within the humanoid. And you imagine, or I could imagine a world where this current trend continues to accelerate, where productivity rises. All right, let's just move down, take a look at what's going on. And JP Morgan saying no one is pricing in a significant move from tomorrow's event. I feel like a lot of preemptive repricing is happening right now, and the markets are kind of just volatile about it. When I talk about that and what I say about that is when you look at, by the way, there's an amazing podcast to listen to, and it's the most recent podcast, not the most recent with Caitlin Long on the Gold, Guns, and Goats podcast. So that might be like a couple of weeks old or a week old. That podcast is phenomenal. Listen, I highly recommend listening to it. And then this headline right over here is going to just be like crystal clear to you what's taking place. That's for those that have that type of nerdy interest, but go ahead and do watch that. We saw both sides of the dual mandate are under pressure. Okay, Fed acknowledging that there's a tension between obviously the job market as well as the inflation. So right. I saw another headline here that I just need to share and I want to share, and it was about with current data. Current data. Data is a main point here because right last meeting the Fed supposedly did not have the 2 days later is non-farm payrolls data, if you believe that. And then a September cut seems unlikely. You all remember? I remember very clearly. I see a lot of people out on the Twitter talking about how the rate expectations are changing and they're hitting on it. But I remember the day of the non-farm payrolls when the probabilities were priced in at like 95% and us saying there is a lot of data into September. I imagine it's probably closer to 50-50, and we're just going to have to wait and see. Here we are. We continue to see that repricing in real time. Right now, they're pricing in a 28% probability of a rate cut in September. And it seems that not that it's on or off the table. I think it's up in the air. And you can see the pushback here. We're getting ahead of tomorrow's Jackson Hole, where the Fed is kind of through the Fed speakers saying September's is unlikely with current data. And that could change because we have a lot more data still until the September meeting, and including September 9th job revisions. Which way they're going to be revised, I don't know. So, this is currently all something that is up in the air. We do not expect Powell to decisively signal a September cut. Powell is the master at walking the tightrope, right? I don't imagine he's going to either. That would be a surprise. That would be a dovish surprise. Dovish surprise is definitely in the air. Do I think that he is going to come off hawkish and be like 2022 Jackson Hole? There's going to be pain. Boy, did he call the bottom. No, I don't think that he's going to come off hawkish. The surprise would be that he comes off dovish, which is potential possibility, but more than likely we see him walk the tightrope. The speech should make it clear to markets that he's likely to support one. That's kind of a dovish tilt if that were to happen, right? If Powell were to say, if the data comes in and supports a cut, then I'm likely to support one, right? And I think it's going to come down to the wire. And then I go highlighted data because this is all about the data between now and then. And again, the market was pricing in a significant chance of a cut or two. That's up in the air. So here we go back to the theme, the rise and fall of immigration and the theme of productivity. Presenters might note that the labor market productivity has growth as an average healthier 1 point. It's been growing. Productivity's been rising, not from 1.5% 5 years ago to 1.8. That's really not that much, even at a compounded growth rate of progress. But it is trending in that direction, and I imagine that in the years ahead, we are going to see that continue to accelerate in more productivity. Me and you, through the advancement of the tools we get to use, again, humanoids making everyone more productive. I think that's all going to happen. That looks like the direction of what is happening. And then you have to wonder what that means for the labor market, because the more productive everything becomes, the less of the participation that is needed. Is there anything else to highlight? I think that prepares us well for tomorrow's meeting. And are we seeing seasonalities continuing to play out? Which, of course, that's what I think so. And we're just seeing so far some chop consolidation. Could this become bigger at any point in time? People are freaking out about the reverse repo. Again, I just think that once it drains, that's when the clock is ticking, that something could happen. And if it's a liquidity crisis, it's probably no big deal, because that's when the Fed has to come in and act as the lender of last resort, and they have to go ahead in and then, yes, run the printers. But the Treasury is super active over here as per our expectations in August. They continue going ahead, raising money to fund the government, as well as go ahead and raise funds in their war chest inside the TGA. Let me just get an update and see if that thing is rising over here. And not so bad. Since they started rising, they're up about $200 billion, and they got about 300 billion more to go. So that was our expectations were this could be a bit of a headwind for liquidity during a period of unfavorable seasonalities. It's hard to argue with that's like, and there were some like experts that were arguing that this would be a headwind for liquidity. Guys, I don't know. I just draw lines on charts. It seems that is what is exactly happening over here. We're seeing the dynamic of liquidity, headwind. We're also seeing the seasonalities. Could that become something more? Again, yesterday we talked about, pointed out that likely, what's going on? I'm not familiar. Set it up for me. Yesterday we looked at what potentially would be the greatest risk to the bull market, and that obviously would be if the whole AI story were to change. We got coming up after Powell next week. We have people new to CTM were getting on me about NVIDIA. They're like, it's not NVIDIA, and I'm like, welcome to CTM. It's all one big meme. It's not meme. Oh boy. Ace, I don't know. I don't have. There's no conviction here. I think that today has been an enormously wild ride on the upside and downside, and very very. Look at that intraday volatility. These are, let's see, 100-point move down or 150-point move down, 150-point move up, and then 150-point move down. That's a lot of craziness taking place, and I think that the low hanging fruit was earlier in here. I mean, this was all easy. And then the last two extension days down were a little bit easier. I think that was the low hanging fruit. I don't see anything of conviction right now, and maybe if we get a little bit of, you know, relief rally next week after Jay Powell into NVIDIA, you know, that's where I would be leaning. That's where, the direction I would be leaning. I don't know that until Jay's done that the pressure stops over here. Are we taking out that low or not? I think that's in question. So is this one down over here. I think that if we close below the green line, and that green line you could see is dink and dink on the daily. So I'll just dink it down. dink and dink, closing below there, then I think that we have further, I think we have a date with a magnet retest of the previous high that was taken out. And whether that holds or not, I don't know. So chops are horrible. I think it's a very tough market. What would you say is the percent of cash we should be in today for our overall trading portfolio? Overall trading portfolios are heavily into cash right now, by the way. So you're talking about if you are trading stocks, you're only 20% allocated into the market. That's 80% in cash. You're currently holding right now only TQQQ, right? And that is on the verge of, there you go. Now it's closed long pending. So this, I guess that's ahead of Powell, so that's a good thing. This could be closing tomorrow morning if confirmed, and then you will be 100% into cash for stocks, and that's a fantastic place to be because right now we're seeing a shift in momentum. Right, time to lock it all up and lock it in. So in crypto, it's a lot different. You're seeing Bitcoin bull runs still in the market. By the way, Bitcoin we didn't see, and we have to see that we're testing over here, and that doesn't look inviting if that's able to take out yesterday's low and close below the yellow line. Not at all. Don't forget September seasonals for Bitcoin are really bad. Doesn't look the best today. But is it, I mean, if that were to hold, this is just the discretionary view. Discretionary is just for fun. If that were to hold and break up, and then we had a double retest of the line, that obviously would be gravy, beautiful. I don't think that Bitcoin is, and we'll look at that very closely in just a moment. I don't think it's oversold or overbought. I think that and don't get me wrong, Bitcoin at 200,000, I think that's really definitely not overbought. It's more than that. But we're far from that. We're very far from that. I think it's very appropriately priced. I would say not too far over fair value. And yeah, that's what I think. Jumping over. So coming over, drinking down slowly, Dog and Nation. Solana taking a stop out. We're just looking at over here. So with crypto, 50% Bitcoin bull runs in the market, 8 hour, now just 50% allocated. Is Ethereum even close to exiting this trade? Let's take a look over here. Yeah, relatively. It will lock in some profit likely if it does exit over here. If it takes out this low, it surely is exiting. But still into profit, still holding. And same thing with Cardano. What a weird mix with Cardano and Ethereum being the ones in the market. And now Bitcoin and Solana out of the market. And there you go. Solana taking a hit over here. 3% on the long side. Out of the market now, going down from a 75% allocation. But obviously it's a bull market. And many people in CTM use Bitcoin bull markets during the bull market. That is currently holding. So you're currently either like went from just 100% allocated down to 75% allocated. So that's exactly how the percent you should be in cash. So right now, you're seeing Bitcoin and crypto more highly weighted than stocks. That's different. For the past 2 years, it's generally been more skewed the other way, where stocks would be the ones with the higher allocation most of the time. Most of the time, it's been Bitcoin doing the heavy lifting on the way up. Positioning. Boom. Jumping over. Let's take a look at what's going on here. and there's no certainty at all ahead of tomorrow's JPOW, and whether or not that will be a non-event or not, I don't know. So looking ahead, let's look ahead at, like, let's assume JPOW keeps the tight rope walking. We got over here, that's pretty hot. Oh, that's the previous. What is Atlanta Fed suggesting? Latest estimate 2.3. Rising or falling? Rising. So likely gonna come in higher than that and healthy. And then we have core PCE. That's a big one. That's a big data point ahead of the following week's big jobs numbers, including Friday's non-farm payroll. And then you move forward. This is going to be crazy. The 9th is when we see the jobs revisions that are coming up from the BLS. And then we have obviously more inflation data all ahead of the 17th. So yeah, this is going to be summer time is going to be explosive coming out of the summer. And is that why we see? Well, that doesn't make any sense. I'm going to just stop right there. But expectations are that coming into the end of September, we would not be surprised if we are trading lower. And there we go. The story continues. So let's get into the good stuff over here, though. And Ethereum, by the way, as Bitcoin looks to be under a little pressure, holding up relatively well. Anything within this range over here is consolidating a mega move up and getting ready for the breakout. Does anyone now, if you were to ask people here, has Ethereum made its high for this cycle? Many likely would have been like, yes. If you ask people up here, do you think that that Ethereum has made its high for this cycle? I think most people would say no. I don't think this cycle is anywhere to being over personally, but we'll take it as it comes. Let's take a look at what's going on, and I want to get into a lot of where I've been spending my time, and we've been telling a developing story. On Monday, this is for the people that are committed, and Monday's video was really neat in so much as that normally this is viewed along the lines of this, or this was viewed along the lines of this, and if I'm viewing this chart over here, my main takeaway of this chart is for the foreseeable future. Now, if people talking about like Bitcoin is going up forever, I probably at least through the late stages, the late majority, right? And obviously the rate of decline as it grows is expected to diminish completely, right? But right now, you have to wonder where we are. And one of the things that I point out is, and I do it through a fractal of Amazon, is showing that similar assets that undergo similar rate of adoption, they go through 3 phases. And those phases are the hype phase, the facing reality phase. Is this really going to make it? And then if it does, the ultimate market opportunity. And as it is, during the ultimate market opportunity, you don't really see things like log scale regression happen. You see actually exponential growth take place. And what happens is price tends to walk up towards the top deviations. So that's my base assumption of what is going to take place on Bitcoin, but I don't know that's correct. So I take a strong and a good look around this to make sure that I know where I'm wrong, and I also know where I'm right, because there's massive ramifications. And I'll talk about one of them with you right now. I'll talk about a bunch of them with you right now. By using this, I've used this, let's say, because it's Bitcoin structure is well established for the last 12 years within this range. And I've said that, well, Bitcoin has spent roughly 95% of its time above this orange line over here. And I think there's a good chance since March for the last 8 years, that line has been established as the floor. So I think that there's a good chance with my premise that what you're going to see is Bitcoin actually walk up as it's hit this early majority phase of adoption over the next 5 years towards the top end of these deviations. I don't see it over the next 5 years coming down below. Now, there could be, and for sure, people worried about recession in 2026. That, that's not like PMIs today are not pointing that direction. We're like this, you know. Of course, there's a chance of a recession. It's debatable what type of effect that recession would have, how long it would last. And again, this is why I have put out the marker that my expectation are price is higher, closer to the 2028 having than the 2024. A lot could happen in between. We're just in between right now and throughout all of 2026. Do I think that between 2026 and 2028 we're headed towards some great financial crisis and or some type of slow motion deflationary bust? Doesn't seem that's the direction that they're looking to take it, whether or not you're looking at the current government and or the expected rearrangement of the Fed and its board, the Fed chair and its board, I should say. And does it like that could happen? No one, especially Ray Dalio, expected that from 2001 until today that China would have undergone that slow motion deflationary bust. It could happen. That's what keeps me up at night. That's what I believe is the greatest risk to the markets. But the chance of that happening, the probabilities, is somewhere probably close to of not of that happening is probably lower than 10%. But we have 10 to 15%, some type of black swan, severe recession, liquidity crisis. Liquidity crisis generally are not really a long-term issue. So anyway, I hope you got all that. Now, using this methodology that we're looking at over here, I could say that, between now and my expectations and coming out to the summer of 2027, I think that there's a potential possibility that Bitcoin could be trading under $113,000. I don't think it's a low probability at all. And that I would have between now and then to accumulate Bitcoin potentially under that price. But after the June of 2027, I don't think that there's much of a probability at all. I think there's more of a probability that 55,000 Bitcoin is cheap. I'm not going to get that opportunity again. Now, the thing about this, and it might be wrong, so that's really important in what we're looking at here today. And judging from this, by the way, this line over here happens to show a CAGR of about 60% year over year growth. And I could say right now from where price is to down over here, yeah, it's not fairly valued, and fairly valued for me is anything like within this range over here. So I'll move it up like right over there. And I would say that Bitcoin for the past 8 years has spent over 95% of its time above there. That's fairly valued for me, and that's at a and now I was gonna say what I think Bitcoin's fair value is right now. I was gonna say somewhere around 90%, and you can see this shows it closer to, let's say, 75. And when I say fairly valued, I mean like that's a bargain. That's what I believe. So Bitcoin is obviously it's still within the sustainable channel. It's not, an attractive like you should be buying here, but I think it's a good place to DCA. And I think that if you got closer to something like $200,000 Bitcoin, I would think that you're beginning to be overvalued at that point. I think that Bitcoin would be coming overvalued, and you could risk if you were buying over here. I could say that, the same way we look on the downside, it could be a while before you were able to achieve that type of growth and recover back to that whatever purchase price you got around $200,000. Now, this gets much better from here. That's the baseline of what we're looking at. And that could be wrong in so much as that we've looked at it like this. I don't know if I should be over here. So by the way, we're going to come back to this one. This line over here, we'll come back to this at the very end. This red line over here is what the power law's expected floor is. Okay. And you could see that obviously as you get right around here, let's say that's 2030 and on, that there's a projected diminishing growth in Bitcoin. I think that's good. I think that's fair. I don't think this is accurate. That it could be. It's on the chart to know whether what we have here is correct or that's correct. But there's a potential that's true. Now we're talking, or I'm talking about. I'm looking at two points of interest over here between the next 5 years or 4 years between now and 2030 and between 2030 and 2035. I'm not trying to potentially even come close to projecting what Bitcoin's growth is going to be beyond that point, right? Not even close. I have no idea. Remember, this is all dependent on the future debasement of the underlying of the currency. My expectations are that that trend is going to continue and continue to accelerate. And then it's also dependent on the continued adoption of Bitcoin. Now, let's move forward and here you have Bitcoin's power law flaw is what I'm interested in. I hope I have a chart. Let me show you this. Just give me 1 second over here. And then I'm just taking a pause here. Actually, that's the chart I want. I'm taking a pause here to actually give myself a breath to get into the heart of today's episode right over here. I don't know. I don't have any idea, but Bitcoin, and Brazil potentially taking a $19 billion position in Bitcoin that's beyond retail. Retail for me this cycle is the small corporates, 50 million, 200 million, 500 million. 19 billion is a big player. And whether or not, they stop there or like most Bitcoiners, that's their first taste and they continue, stacking. Or, that's a large purchase. And I don't think that Brazil would be the last country to make a purchase along that magnitude. Now, Brazil and adopting Bitcoin is weird in the sense that they're supposed to be a BRICS nation. It seems that the United States is kind of walking the line here between gold and Bitcoin. And, BRICS you would expect that kind of would be almost favoring and supporting the US's version of this future system potentially. But yeah, I would love to see them stack it, but that's just further continued adoption at a large scale. When you see like people are like talking about the rate of adoption and what does that mean, and are we seeing more wallets, and retail's irrelevant. And that's not to mean that wallet growth is not going to continue to rise. It will, and it's not to say more people in a room are going to own more Bitcoin, are going to own Bitcoin. They will, but when you have a player that comes in and you know, sailors stacking billions regularly. When you see if a country comes in like Brazil and stacks $19 billion worth, the rate of adoption has accelerated drastically because it's not only about the number of players, it's about the size of the players that are at the table. So coming on, just a brief look over here at Amazon, just to show you is, could you imagine I don't think we need these. I know we don't need these lines over here. I'm going to remove that. This was Bitcoin specific, but come over to here. And if you're someone looking at Amazon in January 2012, okay, you're coming off of someone who's just went through what was a lost decade in the US public markets. You're coming off of someone who's just been through the great financial crisis and also the dot-com bubble bust. You have recency biased and don't I know for the markets are not crashing because for the next 10 years, all these people that were participants in this market thought that the markets were going to crash. They happened to go straight up and to the right during this particular point in time, but that's not what recency bias was or psychology. And you might think that Amazon is experiencing diminishing returns because it is. And you might throw up a log regression channel, right? Of what your expectations were for Amazon. But Amazon at this point, if you look at it through its adoption cycle, went through a hype, went through facing reality stage, and then out of it, people say you can't draw a trend line on a log chart. Well, yeah, you can and you should, I think. And you could see that Amazon was able to not only walk up, but then walk up towards the top end of its deviations. This is my baseline expectation for what happens to Bitcoin. Now, what happens to Amazon here and going forward, I don't know. We've looked at, it's not just Amazon, we've looked at Microsoft, which followed this pattern, and then went through a period of just sideways, which Amazon may or may not do. I don't know, but it went through a long period of sideways until Microsoft was able to more or less reinvent itself, and through Azure and its cloud computing and able to become an absolute beast and set off on a new structure of that. Gold has done it two or three different times. It's in the process of doing it again right now. And it's not to say that Bitcoin will do this forever or that Amazon will do it forever. I'm looking what happens over the next 5 and 10 years. And I believe from on a linear chart, from on a no, this is a log chart that we're looking at here. And people are like, you can't do that on a log because of log regression. And they think that it's going to roll over. And I'm trying to paint the picture that I don't believe over the next 5 to 10 years, that's what we're going to experience. Rather, what we're going to experience is it walking towards the top, and not the tippy top of that maybe, but towards that top third. That seems to be the trajectory that it's headed. So those are my, like, I continue breaking it down. I hope you guys, if anyone's here, you all are able to keep pace. There's no question about it. But do spread some love. Hit the like button and let's keep going because this conversation is going up another level today. All right. So well, I don't know. That's a worry though, Dan, about the rate of adoption. I'm glad you bring this up. Listen, I don't know. First, let's see if it's passed or not, and and if they make the purchase. These things happen to usually take a bit of a time. I don't know, but really, thank you, brother. There are the rate of adoption and where I'm wrong is really important from this perspective, and that's what I want to break down to you and show you and continue this nuance that we are working out over here because it's really, really important. And so let me jump back over here. And I'm just gonna just bear with me. I'm gonna get through it all, and this is a great one. So this chart is what I want. And The difference between this chart and this chart is significant because this chart suggests to me that I have until June of 2027 to be able to potentially pick up Bitcoin below its current price at $113,000. This chart, which is showing that, well, since 2013, Bitcoin hasn't traded below this trend line. And this chart is suggesting that I would only have between now, I gotta get these things out of my way, between now and March of 2016 in order to accumulate Bitcoin under $113,000. Let's say June, just to be easy. It's a year difference. And don't forget dynamics that are happening. Potentially people are going to be looking to sell 150,000, looking to sell like September, October Bitcoin, whatever that price might be. And if they do that, let's say they sold it at 150, that leaves, if this continues to hold, it's held for the last 13 years. It doesn't mean it will continue, but it has held for 13 years, and it means it's held during two significant events. It's held during um the global lockdowns. It's held during the FTX collapsed and the rate shock of the Fed's tightening cycle. But that would suggest that by August of 2026, anyone who sold at 114,000, they're not going to get the chance to buy back in. Now I don't know that, and I don't think that this continues forever at all. I don't know when it ends. It will be clear when this trend line is broken, but it suggests a very high rate of growth. This trend line is 80%. Now, granted, you have to buy it at the bottom in order to get there. And I could also do this with you very quickly. This is the mean of the channel, right? So, the mean of the channel is a lot higher. This suggests, for example, that if you're buying at the mean of the channel and then you move forward to January of 2027, that suggests $250,000 Bitcoin. Whereas, 163 is the floor. All right. Let me jump back over here. So, Naz brought me attention. Someone shared a slide yesterday of the NASDAQ like 10 years earlier and Bitcoin. And that I might come back. I don't have it pulled up here, but that slide suggests, all right, y'all, if you're here, you're committed. Just give me 1 second. Let me pull it up. This is pretty neat, and the timing is perfect, so I want to bring it up. And then I'm just laying the groundwork to get to the good stuff. Ah, come on. Gotta have it. Huh. Hold on a second. You gotta stay with me. I'm gonna find it because it's a really good one. I hope. Stay with me, all. That's Ed Sekoda's P&L you're looking at right there. Ah, I might not have it in front of me. I don't. That's one of the few times I've not been able to track it down and find it so quickly. I can't find it right now. And I want to find it for tomorrow. It's a really, 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 really good one. And what it's showing is a fractal of the NASDAQ and then a fractal of Bitcoin and what the NASDAQ has done and where Bitcoin is along that fractal. It's if you want some bullish hopium, that's the one. If you want some bullish hopium, that's the one. But at the end of this session, I won't be able to. I don't think I'm going to be able to pull it up today. I hope someone sends me a DM and reminds me because I want to pull it up and share with you tomorrow. Hold on one second. I'm just reading a couple of comments. Amen. All right, let's keep going. Let's get into it. So the picture I'm painting and presenting is that the numbers are crazy if you keep projecting this type of rate of return growth. There's no question about it. So I'm trying to disprove myself that it's possible. Okay, so we have the orange line over here is showing a 60% year-over-year growth. And if you look at Bitcoin, let's start with looking at Bitcoin's CAGRs, and then it'll help inspire me. If you look at the 4-year CAGR of Bitcoin, no, that's not how I want to get there. I'll get there later. Let's continue over here. So now we have on our chart 2 lines. We have the orange line, which is showing a 60% growth rate of Bitcoin. And we also have the green line, which is showing a 80% growth rate of Bitcoin. And of course, how we're using it is all depending that you're buying it towards the bottom when price is actually towards one of those baselines. Because it's different if you buy it up over here. If you buy it at the top of 2017, this is wild. If you buy it at the top of 2021, if you buy it anytime price is elevate, like including here compared to here, right? And we articulate that by saying, well, if you buy price down over here at $25,000 in February in August of 2023, then likely up until August, you have a chance of it trading lower, and then after there, likely not again. And that is held true. So the higher you buy it off of the line, the longer the potential that you have the opportunity to buy it lower, and that it will trade lower. So if you're buying price at $200,000, right? You have to, instead of fast forwarding into June of 2027, you have to fast forward to January of I'm extending that line up to January of 2029. There's a big difference. The higher you're buying it up further away, the longer it's going to take to be able to put that floor in. I don't like how that's being expressed, but that's how I'm expressing it to you. So the next thing I'm saying to myself, it's impossible. It seems to me impossible to continue this trajectory. I can't imagine Bitcoin continuing to have this type of CAGR. So I wanted to look at some other things with you. So a lot of people talk about the potential of Bitcoin having something like a 30% CAGR over the next 10 years, right? Great. And just so you know, my own belief is going to be significantly higher than that. But 30%, let's look at it. I'm drawing this line in over here. This is a 30% year-over-year growth of Bitcoin. And if we'll start by putting it down over here. And I think that it's really good to look at in relation to oh no, I just messed up, but I have it saved, don't worry. I think it's really good in looking at in relation to the potential power law flaw, which we talked about earlier, and going forward. So we will do that. But my eyes were then drawn to what's happening over here with this trend line and the angle. And that angle over here happens to be a 50% CAGR. No. Stay with me, y'all. I'm not going anywhere. 25% CAGR. Nope, that's not 25% CAGR. Stay with me, y'all. I'm not going anywhere. And I want to get this right, and that's all. 50%. I stopped it at 50%, not showing you, but I did the math earlier. I know what it is. And it's 50%. So that's not 50%. The red one is. There you go. If you're here, you better type something and let me know. So the red line over here is a 50% CAGR, which is this trend line that we have down over here. And we talked about what like the low would be in if you had a 75% drawdown from today, take you into that red line. Now, I was showing you this over here. The lowest CAGR that you have in the past 4 years is 21%. 21% and 4 years. 4-year CAGR is really off on Bitcoin because of every 4 years there's been a bear market, which has had an 85 to 75% drawdown. So it really skews things. And if you look at something like a 5-year, look at this. We're just looking at the red line over here, which is a 50% CAGR, which is basically showing you roughly 50%, right? And then you see obviously like currently you're looking closer to that 75, 80% CAGR over the last 3 years. If you buy, this is fascinating. If I'm focusing on that 21%, 25% CAGR, if you buy Bitcoin at the top at any point in time, look what the CAGR is. 25%. It took 5 years to get back to where you were. If you bought the 2018, 2000 and December 2027 top, it took you 5 years to get back towards that CAGR of 25%, call it. If you bought the April, May, April, November top over here of Bitcoin, it takes you roughly 5 years to get back towards that 25% CAGR, 21% here. So there you can see. So if you're buying the top, there's a CAGR of Bitcoin of roughly 25%. 25% to be more accurate, right? So if you have it over here and, you know, if Bitcoin gets elevated or anytime that it's towards that top third, there's so far on Bitcoin's like roughly a 25-year percent CAGR on Bitcoin. I would not say that Bitcoin's CAGR therefore is 25%. I would say if you're buying extremely overbought Bitcoin, then you're looking at a 4-year CAGR of roughly 25%, 25% more accurately. Now, here we have the Bitcoin CAGR of 50%. And I think this is a good slide right over here. If you like from 2017, 2018 on, the last 8 years, the 50% CAGR is basically 50% of the time. Like price has been 50% of the time above it, 50% below it. And if you look at what like more or less the average CAGR of Bitcoin has been, right? I'm not going to say, well, the 3-year CAGR is significantly higher, closer to 80%, and it's exactly 80%, which is that's the green line, which is the green line. And you can see that for the last 3 years, Bitcoin has been accelerating at that pace, right? Now, so I'm not going to say it's the 80%. I'm not saying it's the 25%, because that's only if you're buying Bitcoin at its most overvalued, you know, portion. But it happens to be much closer to that 50%. That's where price has been trading, you know, roughly above and below for half the time. That's a massive CAGR. I do think that type of CAGR is going to continue is the question. A lot of people believe that 30% is, you know, appropriate of what Bitcoin is going to be able to continue appreciating at. Let me just go ahead and take this to a cleaner chart to make it easier for myself and for you. I could use this one. So here's the 30% CAGR of Bitcoin. And obviously, as of right now, prices spends, I mean, obviously we just looked at many different ways of why this is a very low number. The question is, does this become more appropriate as we move out? Some people don't believe it's even possible for Bitcoin to continue at a 30% CAGR for the next 10 years. I think it's going to be obviously above it. So I want to look at the floor then, the floor of the power law. And I'm going to throw in the 30% CAGR. And if I don't know if we start off of the low, I could do this. It's kind of neat in so much as this. As you get to 2029 and beyond, the power law floor is suggesting that Bitcoin's CAGR will move down towards 30%. Doesn't seem unreasonable to me at all. Hold on one second, I'm trying to find the right view. Now, as you get to 2029, question is where will Bitcoin's price be? I believe going forward, there's no question as we continue the move up along the adoption curve, we're in early majority, as we get into late majority, that the CAGR is going to drastically diminish. I don't believe that's going to happen over the next 5 years. So let me see if Bitcoin was trading at into 2029, where our floor is. And our floor is 250,000. That's off the orange right over here. The green, if we continue the rate of adoption, is going to be significantly higher. And I'm not coming to a conclusion here, except that I expect that there's going to be a change at some point in time with the overall growth rate of Bitcoin. I don't see that happening over the next 5 years, though. And over the next 5 years, I think that actually it's going to be accelerated towards the overvalued factor. And once we hit that overvalued factor, once the walk up, we say towards 1 million happens, yes, at that point, Bitcoin's CAGR likely is going to significantly decline. And that's when we pull out our tool probably of for example, the 25%, right? And we could say, like, let's pretend that Bitcoin is able to hit, let's say something like here's the green line. Let's say it continued and it was able to hit at this in September 2028. That's only, I'm finishing my thought here. I don't care. So into the summer or January of 2029, if Bitcoin continues to hold this massive off the low 80% CAGR, or it continues to hold its 60% off the low, which I highly believe that it will. I strongly believe that it will. And if it were to touch something like 350 in January, don't forget that's the low. He's not even oversold, so I don't believe that that's when you would hit the 25% CAGR from top to top. This seems realistic to me. This is saying something like in January 2029, $544,000 Bitcoin. It is towards the top trenches of being overvalued. It could then, you could say, or I can make the case that you could then hit a 25% CAGR coming into 2033 and putting Bitcoin's floor, projected price, I should say, somewhere around 1.3 million. Anyway, jumping back to real time. Yeah, every cycle's been massively different so far. I think it's a great question. I was going to run it back over to here, and obviously during the hype phase, the price appreciation of Bitcoin was absolutely enormous. And then during this facing reality phase, you could see the nice bull market, strong bear market, nice bull market, strong bear market, but we've been within this sustainable channel, we call it. Let me find one more slide here. I'm so sorry, I got so messy today. We've been in this sustainable channel now for the longest time ever. And I think that this suggests that this cycle is a lot different than past cycles. To me, it does. Now, in this cycle was the closest in resembling it. And in this cycle, Bitcoin was able to be within that sustainable channel before breaking out for 826 days. And I went off of the low, not where it entered into the channel. If I'll go off the low here until where we are today, that's now over 200 days longer. And if I go from the time it entered into the channel until where it is today, that is 1,180 days compared to 840 days. So the length that it's been in the channel is the longest it's ever been in the sustainable channel, and it doesn't show signs of breaking out to the upside or downside anytime soon from where it's right in the middle of the channel. So expectations are that this is going to continue. I expect it will and could break out to the upside eventually, and when that happens, that's when I'm looking for soon after a sharper correction. That's when you might see a 50% correction on Bitcoin. But outside of that happening, and from where it is now, I mean, a correction right now into the green line support, which is held for the last, that's a 34% correction. That's normal within a bull market. Bitcoin has held this rate of ascension for the past 8 years. I'm not sure that I see it breaking out anytime soon, breaking down anytime soon. It could happen. We give it a 10 to 15% chance. That's a very low probability. I think most people are going to be caught off sides here if this current rate of adoption continues. But I see, if Bitcoin tops over here in the coming fall, and then if Bitcoin tops, I'm going to get rid of all of this nonsense now. And it's like CTM. It's explained once. It's assumed that you understand the lessons being shared and taught. If Bitcoin were to correct over here in sometime into, the end of October, and then correct 75%, then I would say, yes, you're right. That is a lot more of the same. It's a lot more of significantly diminishing returns. This is what a lot of people see. A lot of people are definitely, their view of Bitcoin is that, no, there's no way we could have a 30% CAGR going forward, because what you're seeing is just a lot more of the same with significantly diminishing returns every cycle. And if this happens, right, that 4-year CAGR, as we just looked at, it's going to take roughly 4 years into 2029 just to get back towards this $115,000 Bitcoin. I don't think that's happening. That's not 100% correct. Let me take the 25%. If Bitcoin tops over here, and let's say it topped at 145,000, that suggests if there's the normal 4-year cycle behavior into 2030, 4 years later, Bitcoin is going to be trading at $350,000. That would be a lot more of the same and as what has happened. Could that happen? Well, it's nice to know if that happens, that where I was completely wrong. But I have to say, it's going back 12 years. That's never happened where Bitcoin has broken that angle. So that would be a first, and that would be different. So is it a lot more the same, or is this one about to be different? Those are, no one knows. I don't know. Those are the questions. That's why I'm trying to bring the awareness about us so that we don't get left behind, if possible. All right, y'all. Let's call it here. Let's pause it here and pick this back up tomorrow ahead of Jerome in Jackson Hole. And we'll continue adding these nuggets, painting a beautiful picture over here. And we'll continue on. Have a beautiful, beautiful day, everyone. Thanks for being here. God bless you. I'll see you all tomorrow. I don't know how much of a fun Friday it's going to be when we got to put some work in with Jay Powell early taking the mic. Jay Powell is expected to speak at 10 a.m. Eastern Time. We'll have a lot to digest. I'll see you all later. Have a beautiful day, everyone.